possible to directly move the numbers from the journal, okay, not even the journal, just from the from the transaction details can we create a balance sheet. Okay, so that's what we are trying to do. So let's see. So here we have the transaction details, and here we have all the elements to do our problem. Let's see whether we could do it. So we'll start. So first one is capital being introduced to the business 1,20,000. So what happens here? Two things happens. One, your capital gets increased. So first we'll increase the capital by 1,20,000. Okay. Next, increasing capital by 1,20,000. The next is there has to be two elements, right? You have increased the equity and liability side. So opposite on the asset side, it should increase. So as he has increased input as cash, you have to take it as cash. So this is also would be 1,20,000. Okay. So we'll take all the placeholders and we'll neatly have only the format. Okay. Always look at the balance sheet total and the liability total. So they will be always at 1,20,000. Okay, they should come to 1,20,000. We'll also like add the retained earnings. Okay, that also we'll pull, so that only when you know how it is getting pulled, you will know how these numbers are working. So what we'll do is we'll put the formulas first and then we'll do it. This number minus this number. Okay, so one entry we have done, and we have also done I think it would be great if we could adjust all this like this. So that if you could see in one place, okay, so I think it would be like quite easy now to look at how the numbers are moving. Okay, because you could see the balance sheet easily in one single screen. So we'll start. So the next one is borrow a loan from bank. Okay, so when the company is borrowing a loan from bank, so first there is a loan that is being created. right? There is a bank loan that is created. So bank loan is a liability which is of 10,000, and at the same time, okay, the company gets another 10,000 into its hand. So if you see here, there's already 1,20,000. Okay, now another 10,000 gets added to it. So this value would become 1,30,000. So again, if you see, the balance sheet is tally. So the next one is machinery bought 20,000. So via cash. So they are buying a machinery. So if they buy a machinery worth is 20,000. So cash is going out of the business. So this number would become 1,10,000. But they have bought a machinery, okay, that is worth 20,000. So again, if you see, the balance sheet is still tallying. Okay. The next one is depreciation. So machine is depreciated. So machine is worth is 20,000 and it is depreciated by 1,000. Because of that, this number becomes 19,000. But the balance sheet should tally. So how can it tally here? It tallies here because we could put depreciation expense in any of these SOPL boxes. So this would be, we will take this area as depreciation. Okay, depreciation is 1,000, but what 1,000? It is minus 1,000 because it is a cost. So we could put minus 1,000. Immediately when I put here, the profit would become minus 1,000 here, and the retained earnings part will also become a minus 1,000. So you can just check it now. Okay, I think it's a cost. Okay, so I think we have taken the symbol as 1,000. So we'll just put 1,000. It will get tallied. So you can see here, this is a cost. Okay, and when from the profit, the cost of 1,000 is deducted, the net profit becomes minus 1,000, as well as the retained earnings becomes minus 1,000, and the answer again tallies. So up to four items are now done. We'll go to received commission, cash of 10,000. So when you receive a commission, you are getting a cash. Okay, so you can add it. So if you add it, it becomes to 1,20,000. Okay, and commission is an income, so which has to be shown in the SOPL. Okay, so we'll put it as commission income here. Commission income is 10,000. So immediately you can see here, this 10,000, okay, will show this as net profit as 9,000, and this 10,000 and this 9,000 would have been added to the retained earnings, and thereby again the balance sheet will get tallied. Okay, so again the fifth item is over. The next item is, we have adjusted already this as salary. So we earlier had it as Rahul. So we have converted that into salary. So cash paid to salary is 2,000. As cash is going out of your business, 2,000 you have to deduct. So this number will become 1,18,000. Okay. At the same time, as it is a salary, it is an expense. You have to show it under some heading. Okay, you have to show under some heading. So again, we'll show it under the admin expense. Okay, so as we are having like several expenses, better we will show admin expenses separately. So we'll have depreciation shown as 1,000, and we'll also show the salary separately. So salary was 2,000. Okay, so both put together we'll show. So we can take this, so that comes to 3,000. So again you see our balance sheet tallies. How it tallies is, here we have added a salary of 2,000, that deducts the profit by 2,000. Okay, or the profit goes down by 2,000. So our retained earnings also falls by 2,000. Okay, so cash falls by 2,000, our retained earnings falls by 2,000, So both numbers falls by 2000. So the next item is cash. Okay, cash paid to salary is over, and paid salary by check. Okay, so if you are paying salary by check, then your bank account, okay, your bank account should be should go down. Actually, we do not have a bank account here. Okay, we do not have a bank account. So without having a bank account, if you're going to withdraw from bank, it's called as overdraft. Okay, it's called as overdraft. So better what we'll do, okay, just for adjustment sake, okay, we'll do the payment of salary later. First, what we do, we'll adjust this entry, cash deposited into bank. If you deposit cash into bank, your cash should first decrease, right? It should first decrease. So this number should become 1,13,000. So by 5,000, and our bank would be increased by the same amount. So that's going to be 5,000. So there's only a reduction in cash, increase in bank. So only your asset side gets affected. So the next one is, so you've done this. So now as we have a bank account, okay, we can pay the salary. So salary is going to be again 1,000 rupees. So we already had salary here. We'll add one more salary, which is of 1,000. Okay. So the total administrative expense now comes to 4,000. So when we put this, okay, when we put this, immediately our profit will fall to 6,000. So you could see here, okay, now the balance sheet is not tallying. Why it is not tallying is we have not taken out the payment of the salary from bank. Okay, it was 5,000. From that we have to minus the 1,000. So the answer will be 4,000. So now your answer is again tallying. So we have like 4 more entries. Let's go for it. Sold goods for cash. Okay, so first it's a sales. So we have sales of 14,000. When we put this, immediately your number here will become 1,50,000 because it's added to the profit, and profit is reflected here. It's 1,50,000. But what happened to the other side? The other side, we have got cash for 14,000. So add 14,000, you will get 1,27,000. It's again tallying. So this is over. Sold goods to Murugan. Okay. So again it's a sale. So sale, what we'll do, we'll add the sale one more time. Okay. So it is 14,000 plus another 15,000. So our sales goes up by 15. So the answer will be 29,000. When we put enter here, this number will become 1,65,000. But our asset side, it has not changed. Okay. On the asset side, it has correspondingly increased the trade receivable because the goods are sold to Murugan on credit. So we have to put 15,000 as the asset. So now you got tallied. So we have 2 more entries. Purchased goods for cash 5,000. So as you have purchased goods, your cash position should reduce. So we will convert this to, so you got 1,60,000. Okay, but here it is 1,65,000. Why? Because you have to adjust your cost of sales. Okay, so we'll take purchase here. We'll take purchase here, as this is a very small illustration problem. We can take purchase here. So purchase is going to be 5,000, which you have to reduce. And now if you see, it's again tallying. And we have one more entry. Purchased goods from Raju on credit. As you have purchased goods on credit, first you have purchased it. So first show that. Already purchased 5,000, now purchased 6,000. So total purchase is 11,000. Okay. So this number will fall by 6,000 now. Okay. But as you have bought on credit. Okay, it's a trade liable, trade payables, so that trade payables will be 6,000. So is our balance sheet tallying? Yes. So that's how you have to work out, okay, each individual transaction to the balance sheet. Okay, you should remember very thoroughly how each and every entry will affect the P&L and how it will affect the asset and equity and liability sides. Okay, so this is a very small problem, okay, with very simple illustrations, but if you could understand this, you can step by step, even you can understand even complex journal entries, okay, or complex transactions. But without knowing this, it's very difficult for a person to understand accounts at all. That's why people don't like financial accounting. So we have one more element here, that is interactions.